Hey guys, it's Mark here from ETF Tracker and welcome to Exchange Traded Fridays. In today's episode, we're going to be doing something a little bit different because we're actually going to be doing an interview. We'll be talking with a financial advisor, Adam from Altus Financial. And the reason for these interviews, and we've got a few more to come up, is because we want to get to know different parts of the ETF market and get their views and opinions. And hopefully that'll provide some really good, valuable content for you guys to listen to and learn. So Altus Financial, they provide financial guidance without the jargon, doublespeak or fine print. And that is fine by me any day of the week. So we're keen to learn more and we hope you are too. Okay, so welcome Adam. Thanks for being here.
No problems, mate. Thanks for having me.
Very well. So let's get straight to the questions. I wanted to find out, and for the viewers as well, it's always important to understand like the background of people that we work with and speak with in the ETF markets. When did you get started in the financial markets yourself?
Yeah, I mean, even thinking of being a younger advisor or a younger cohort in this industry, that's probably stretching the truth these days. So I started back in kind of 2005. So did the uni thing, spent some time overseas, came back and jumped straight into financial markets. So started out in equities directly and then jumped straight into the wealth management financial advice world and have been there for about 16 years now. So I don't think I can say I'm one of the younger advisors anymore.
At a point in time, you probably were the youngest advisor when you first started. So that would have been really interesting, just getting into it from 2005 and experiencing the highs and the lows that, happened over those next couple of years. And with Altus Financial, can you tell us a bit more about that, just so the viewers get an understanding and, what kind of clients that you provide services to? That's of interest.
Yeah, so Altus Financial, we're based here in Sydney and have an office up on the Central Coast as well. We are an integrated business. We do term ourselves as a private client advice centre. So we have obviously the wealth management side of the business. We've got lending, we've tax advice, business services, CFO, outsourced CFO type work. So the types of clients that we work with really do vary. On the accounting side, we do look at that mid-size business to look at the CFO work or the compliance work associated with that, and then obviously we integrate the wealth management services into the owners of those businesses and staff of those businesses. From the wealth management team as well, we have many clients that are either wealth accumulators or pre-retirees and retirees that don't necessarily have businesses, but really do value that strategic approach and strategic advice in regards to their wealth management. So it's the type of clients do vary. What we're trying to do is obviously look at again that next generation as you try to continue to build and grow and organically grow your business. So looking at trying to deliver services through to younger clients is something we're focusing on at the moment, and that's where kind of ETFs do play a little bit of a part.
That's awesome. And speaking of ETFs, so I was going to get your thoughts on that, but before we kind of jump into that particular question, I mean, this week's been really interesting. There's been a lot of ASX and AFR kind of news out because this month is the 20th anniversary of ETFs coming into Australia. It was the 27th of August, 2001. All that time ago, so even before you started. But there was an article on like retail investors, Gen Z, millennials, more of them are getting interested in ETFs as opposed to, say, for example, like if they don't have enough to get into a home just yet and buy into that, like ETFs are a great way to get in. I mean, you just spoke to that. Have you seen more on your books or from your experience being in the markets, more millennials, Gen Z or younger investors?
Absolutely. I think there's two sides, or there's multiple sides to that coin there, where ETFs is a more cost-effective way of getting exposure to a broader pool of assets. So I think you're right there, Mark, when you're talking about the difficulties of people getting into the property market, which a lot of younger people will try to save for a deposit, and that's continuing to get further and further. And harder and harder to get onto that ladder, and they're looking at what they do with their funds, and when cash rates or term deposit rates are sitting at 5, 6, 7%, then you can sit on your hands and take that. But when you're getting a 0 point something from a bank for a medium term deposit, you're kind of going backwards. And I think a lot of Gen Ys, Gen Zs are realizing that and trying to get more kind of smarter with the way that they allocate their funds to accumulate wealth over time. So I think that has driven, that's one side of how ETFs are being driven of late. And then also, from my perspective, it's ETFs tend to be a strong and a positive way of getting exposure to satellite strategies and themes. So there's been a lot of, we've spoken before together on panels on ESG, and I've spoken to specific kind of cloud computing or robo advice or anything to do with that kind of technology driven theme that we're seeing, especially over the last 2 to 3 years. You're getting a lot of interest and a lot of funds flow to that type of strategic theme.
That's great. And, just on that further, the growth has been, some could say explosive. We're definitely not at the heights we're seeing overseas, but we have seen that rapid growth come down here. What are your thoughts on that growth? Did you expect, way back when you started and were initially getting involved in the markets and ETFs, did you expect ETFs to get as popular as they have? And do you see more room for growth? Can you talk about that?
Yeah, I think, you needed to have a crystal ball to try and figure out where you thought ETF growth was going to go. But I think technology has played a massive part in the ETF growth. So I think when I started and going back to 2005, 2010, that kind of ASX listed or share market exposure, you tended to lean towards a broker to do that. Over the last decade or so, online platforms for $20 a trade, you can do it on your phone. So technology apps, online, you can get that exposure much easier now than what you could 10 or 15 years ago. So, if you jump onto the ASX and you have to choose between CBA, NAB, ANZ, or you can go over here and get a basket of shares and potentially just get all of them, then I think there's been that drive towards ETFs to get a diversified portfolio of stocks rather than sitting there and stewing over, do I go BHP or Rio? So I think technology has definitely assisted in the growth of ETFs and will continue to do that. It's easier now just to, you and I can jump online and buy an ETF in 5 minutes if we wanted to. So,
exactly.
And I think that will continue. And I think cost is another factor that has driven ETF growth over years, when fund managers have had it good for a pretty good time, and the old 2 and 20 type scale up against a 0.09 for a all market world cap ETF is pretty compelling for someone that doesn't necessarily or hasn't had the opportunity to think about active versus passive and have that conversation with an advisor to this point. So cost, technology, intergenerational transfer of wealth is going to be a key driver there as well, where the older generation have advisors probably more have an actively managed portfolio where that's going to be transitioned to. That's the cohort that is really looking at that passive type exposure and looking at ETFs. So is there the opportunity for ETF growth to continue? Well, I absolutely believe there is, with that intergenerational transfer of wealth.
Yeah, it certainly sounds like those very strong tailwinds, and it's something I see as well. And there's a variety of other kind of factors that play in there. So yeah, I think we're on the same page there. And with your type of clients, do you guys recommend ETFs? And when you do make that kind of recommendation from the advisor point of view, Like, what is it that makes you think about, okay, for this client, they should look at ETFs? Or is it clients actually, you know, maybe they're more asking for ETFs as part of their portfolio with you? Could you elaborate on that a bit more?
Yeah, we definitely use ETFs across the business. We are a business that believe in active management, but we also believe that we need to construct portfolios for clients in line with their preferences. So all clients will have either a preference for active versus passive or ambivalent to that specific preference. So if the client has a preference to lower cost, then we do have a portfolio or a managed account that is a low cost managed account. So it's still actively managed, still gets the benefit of our investment committee that we run, looks at the asset allocation, looks at the portfolio construction mechanisms that we apply to all of our managed accounts, but it's really driven by a lower cost solution. So that's one way that we definitely utilize ETFs in the business. The other ways, as I kind of referenced earlier, is really looking at that specific kind of allocation to a theme, and we're seeing that a lot with ESG. We also have a portfolio specific to ESG investing, but it could be, you know, emerging markets where we may not have a discrete allocation to a specific emerging market that a client might be looking for, and rather than, you know, looking for an active fund manager there, we might look for an ETF that will get us that satellite type exposure to a portfolio over time.
That's pretty important. And I guess the ESG one is very interesting, obviously, to both of us, considering that we were both on the Financial Standard forum with eInvest talking about ESG. And just on that, so, you know, we spoke on that same panel at that ETP forum. And you mentioned during that talk that education is important and clients are looking for advisors who can help them understand things like ESG investing. How important, whether it's for ESG or just generally, how important do you think that education is to ETF investors?
I think it's really key to trying to link a potential client to an advisor. And I think it's building that rapport and trying to bring them along that education journey to give them the information and the tools to make, you know, an informed decision around their finances. You know, as an advisor, it's not my money that I'm allocating a client's money. And for me to be able to, you know, have the sleep at night test passed in my room, I need to make sure that portfolio is in line with what my client's preferences and values and beliefs are. To do that, we need to educate them a little bit. You know, if they were fully educated and understood everything around ETFs, everything around active versus passive portfolio construction, then we probably wouldn't have been having the conversation in the first place. So it's education is key, and also the way that it's delivered to clients. You know, some clients may well prefer, you know, engineers might prefer 60 pages of explanation to run through, but, you know, you kind of artists might do it with diagrams. So, you know, education and trying to increase that level, and we're seeing that in the industry as we speak with, you know, we're all aware of what the education requirements are, and that's not just born out of nothing. That is, you know, the industry, the sector, the regulators saying that, you know, we need to have a certain degree of education to be able to deliver the services that we want to and the advice to the Australian public.
Yeah, and that's massively important. For those that don't know, I mean, it's pretty fascinating that financial advisors, you guys have to continually be educated. You get a certain amount of points that you need to achieve in a year or something like that, right? So you have to go to events and you've got to just keep on learning, right? But that's all for the benefit of the clients.
Well, it is. I mean, things change, and you know, if I did study 15 years ago, you know, the foundation of that study probably hasn't changed, but the strategies that are employed, the legislation that is applied is changing every year, and you know, advisors need to keep on top of that and make sure that is then reviewed with existing clients, but then applied to new potential clients in the best way possible.
Yeah, that's really, really important. And just off the topic of ESG or just around those thematics, like apart from ESG, you mentioned cloud computing before as well. I've seen a lot of talk about robo and batteries and just tech investing in general. What are some of the other, or even within those, like what are some of the other interesting kind of thematics, some might call it, within ETFs that you've seen on the ground, because you are in the trenches there with clients, face to face. I'm looking at just the data, but you're right there when they're making those investment decisions and, as part of that advice. What other kind of thematics are you seeing people are interested in or talking about?
Yeah, they tend to be the key ones. I mean, we're in a sector that, it's interesting to hear that the ETF sector is now 20 years old, but it's still in its infancy. And as I said on other panels, you do find that it's not surprising that fund managers will follow the flow of funds and create new products within that stable. So if we go, I don't know what the numbers are, you would have the data, but 10 years ago, I think the number of ETFs available here in Australia would be much, much higher than what they were 10 years ago. The growth in that has been huge, not just from a fund perspective, but the availability of different strategies. Why? Because I think your BlackRocks, your Vanguards, everyone that is looking at ETFs has seen flow of funds and allocation of funds and said, well, we need to broaden out and widen out what the availability of different strategies are. And there's emails coming in every week of saying, here's a new ETF covering this, and then here's a new ETF covering that. That'll continue as long as the flow of funds continue. But the main things that we're talking to clients about is we're getting more and more conversations around that ESG and sustainability and SRI type investing, and clients wanting to not kind of rip up their existing portfolio, but build a bit of a tilt and an allocation. And that's where I say the education is key, because ESG is going to mean so many different things to so many different people. So trying to understand and understand what their values are in regards to that, and then introduce specific strategies around ETFs into their portfolio is really important. And the second one is, as you said, the technology driven type themes, where we've got actively managed funds that have a tilt towards that, but they tend to be quite diversified, where you can really just target. You mentioned a few of them there. You can really target a specific type of tech or cloud or battery or something along those lines into a portfolio and start building that exposure out. We get some clients that want to be a little bit more active around either currency or commodities. Not a huge part, but it's really opportunistic when they might kind of look for something that might be undervalued. And if we can get a low cost exposure to something along those lines, obviously taking into account the total portfolio, we're not taking a huge bet in there, but you're getting that kind of sleeve allocation is really important to them. And then you kind of working in a collaborative type of partnership with the client to be able to build that portfolio together.
Well, that's really interesting, because the one thing I do see a lot, whether it's just mates of mine that I'm talking to, or people in the various retail forums on Facebook, on Reddit, one of the things that's really difficult, it seems, to people is just like what to choose. Like, even though here in Australia we have far less in terms of the number, yes, it's grown over 10 years and even 5 years. Like the data that we've got from the ASX and Chi-X goes back to 2017. But even over that time, that people still find that there's a lot to choose from when they're looking for a tech. Like, do I do this one or that one? Healthcare, do I do this one or that one? So I guess, the key is to look at how well that ETF kind of fits within their context. And for you guys, the context is they've either got existing a portfolio, or maybe do you guys help people that are just starting from scratch, that have just zero investment, but they've got the money and they want to do something with an advisor? Do you do that too? Yeah,
absolutely. So looking at new clients, if they're looking at constructing a portfolio, it's taking them on that journey as well. So there needs to be value in that advice. So, for whether it's a transactional piece of advice or whether it's an ongoing active management type of situation is really in that first meeting. So it's trying to understand exactly what you as the client is looking for and will get value out of. And then for us as advisors that have the knowledge around kind of what we can add, will we actually add value to you? And being honest in the way that, if it's a $10,000 portfolio and acknowledging the regulatory type of regime that we live in, it's going to be very difficult for me to add value to setting that portfolio in place just because of what we need to work through. But if it's, here is a pool of funds that we have a time horizon of medium to long term, what do I do with it? Then absolutely, they're the clients that we will take through that journey, understand what their objectives are, what their values are, and recommend a bespoke portfolio.
That's brilliant. And just on that, those types of services that you provide and that view of the market, if people are interested in, speaking with you or learning more about Altus, and even just keeping an eye out for when you're next on a panel or a conference, and maybe we're doing that together, how do people reach out? What's the website for Altus?
Yeah, so it's www.altusfinancial.com.au. It's pretty simple. It's we try to drive most things through our website. We do put a lot of information up there. We have a resource center. We have articles. That tends to be our key marketing tool. But it also is built in the sense that we want to kind of give something to clients before they even try before you buy type thing. So there's a drive to the website. You can get to know the business, get to know the different services that we do provide, and obviously there's all of our contact details are on the website as well.
Perfect. And are you on LinkedIn at all? Can people follow you on there?
I am. My picture has a little bit more hair than what I have right now, but on LinkedIn, and very happy to respond to any LinkedIn mail that comes my way. I try to stay off other social media, but LinkedIn tends to be the one that I look at.
No, perfect. Look, I really appreciate your time. On the haircut situation, I've tried to give myself the COVID haircut, but doing it myself is pretty hard. You can't get the back, so it's business in the front. Who knows what's going on in the back? But I think you're lucky where you are.
Well, you've done a much better job considering a 6-year-old did mine. So I would take yours over mine any day.
We can rate the haircuts after we rate the ETFs. But look, Adam, I really appreciate your time. Thank you so much for agreeing to come on the podcast. And I hope a lot of viewers out there, and I know that they will get value out of this. So thank you for your time.
Pleasure. Thanks, mate. Bye now.
Well, that was an amazing set of insights there from Adam, and we thank him again for his time. We hope that you learned as much as we did about what the Wealth Advisor's view is of the ETF markets. If you're interested in more of these, please stay tuned, as we'll be releasing more videos of interviews from different parts of the market over the next couple of weeks. We'll also continue with our Exchange Traded Fridays main podcast, which recaps the news of the week. Thanks for your time and have a great day.